Before I go anywhere, I'm going to start with this because it's been something that I did a little bit of research on, and because it's just been bugging the heck out of me. They are pricing in a very, very aggressive Fed with a lot of rate hikes, and I just don't see how they're going to get that, right? So the market, it's getting all this downside pressure. They're trying to price in these rate hikes. They're projecting this very, very hawkish Fed. And I wanted to know how many times in history they've gotten that wrong, or how many times market sentiment has just been completely off the mark when it comes to anticipating these rate hikes. And looking at this record, they get it wrong a lot. So, pretty interesting. The move that we saw yesterday when the minutes came out, the reason that we had that bullish burst is because in the minutes, they really didn't see the Fed as hawkish as everybody has been projecting. They've seen a much more dovish Fed in that in the minutes, right? So it just kind of goes perfectly with that little bit of research that I was looking after, hand in hand, right? They're pricing in this very, very aggressive, very hawkish Fed, and it's just not there. Historically, it's just not there, right? So, 5 things you need to know. We'll just jump over right into that. If you don't have access to Bloomberg, you can still get this report. It's free. You can sign up for it and get it in your emails. So they'll just send it to you every day. Still got risk along the border with Russia. There has been some reports of shots fired. A little bit of talk about the minutes yesterday. Some crypto news, by the way. They just legalized crypto spending or cryptocurrency in the Ukraine. So that's possible for a little bit of a bump there. And then we've got our economic news for today. Make no mistake about it, this market is still trash. There are still a lot of reasons to get in, get your profit, get the heck back out. Right? We're not going to be looking to do any kind of swing trades in the futures. And by swing trades, I mean intraday swings from swing high to swing low, but I also mean holding those things, right? I swing trade, get into futures for days at a time, not just running from the swing high and swing low, but running up 3 or 4 days before getting back out again. Nice little move in Walmart this morning from the earnings. Nvidia, not so much. Yeah. A little bit of before we get into the market watch like we normally would, take a look at the market breadth yesterday. Right? This is kind of going back to the ability to be able to day trade effectively by understanding the markets that we're dealing with on a day-to-day basis. The S&P and the NASDAQ yesterday got the SPX and the NDX. We're kind of holding those lows, pressing against the bottoms, and each time we would run back up for another bit of a fake out, it had no support here, right? This lower left chart, this is the advancing issues of the S&P. And you can see that we stayed below 50% all the way out until the minutes came. Now in the NASDAQ, it was much, much worse than that, right? We stayed down in the teens. So when we look at this chart, it's answering a question: how many names in the NASDAQ are advancing? Not advance versus decline, just advance. None, right? 8, 10, 12 names were advancing. So every time we were getting these rallies up, we were fading them back down, and we had to pretty confident in that move because there was just nothing there, right? All right. 8:30, 10:30, 11, 11:30, 1 o'clock. Now the 1 o'clock is a 30-year TIPS auction. So 11:30 and 1, 11, 11:30 and 1. Additional auctions. These additional auctions can entirely reshape the marketplace, right? So if we've been bullish, it can turn us bearish. If we've been range bound, it can kick us into a trend. If we've been trending, it could just kill a trend. So we're talking about major market sentiment change, right? A fundamental shift across the board in every single asset, everywhere, all the way through. Dow, Russell, S&P, and Nasdaq, the bonds, the dollar, the VIX. You would see the entire marketplace shift if the market doesn't like these numbers that come out, right? And these are what people sleep on all the time. They don't see them. They don't think they're important. They don't even pay any attention to them. Go back and look at your S&P charts. Go back and look at your futures charts. How many times right at 11:30 or right at 1 o'clock or 11 o'clock that the market just explodes and starts running because of these announcements? So it's going to be a full day. On a day like this, don't expect market sentiment to stick. Right? If we're bullish, it can turn around in a heartbeat and just go back the other direction. We're going to continue to see these shifts as the news comes through more on the Russian front. And then we've got all this economic data piling in too. So just be very careful, guys, right? One of the things when you're new that's really important is surviving, not blowing up your account. Just live to trade another day. Right? Because if you can survive long enough, you may actually get good at it. All right, the range is tight and very clear. So we're looking for a make or a break outside of this range. And I think it will be very violent when we do it one way or the other. And it won't even matter which one. Fully loaded with energy, ready to go. This market is a market waiting on a catalyst. So be very careful. There's the cog line overhead. Um, should we get a break to the upside, we've still got an ADR of 2.3. We're only down zero point 0.3. So we could easily make a 2% move to the upside. That put us right through the expected move. 45, call it 45.50. Right? Downside move would have us challenging this area from back here. That put us at around 43.50. Nice, easy round numbers. For the Nasdaq, you can see that we're tightening up, right? We're not just going sideways like we were looking at in the S&P, but we're actually tightening, right? So we're getting higher lows and lower highs, forming that market compression. Lots of energy, right? The orange line, consider that like an energy gauge. So wound up, full of energy, ready to go. We've got an average daily range of over 3%. It's 3.25%. We're only down near a half of a percent. So it definitely has the capacity to make these moves. A 3% move to the upside would get us right around that 15,000. And a 3% move to the downside would have us challenging these lows. And it would not even be considered an unusually large move in the market. Right. So imagine the NASDAQ going down to 14,000 today. And the analysts just shrug and say, yeah, that was totally in line. Could easily hit that level. That would put us back down into the volatility box from back here. The head and shoulders that we had already played out. It hit its target. It's done. We're looking for a new reason to go. The bigger picture trend line, it's a bit over our head still, and with this much angst going on in the market, with all these external forces between Russia and then all the economic events of today, and this disagreement with the Fed, I wouldn't expect anything to stick, right? So we're just going to continue to bounce from these highs back to these lows and then back up again. All right, so energy's a little green this morning. They got beaten down really bad yesterday afternoon. They didn't like that catalyst from softer Fed, a softer, more gentle Fed. FXI kind of holding the range. So, we're getting those rebounds, right? Linear regression, sharp move to the downside, trying to reciprocate back the other way. Plus, it's that capital rotation. So, FXI slightly bid, biotechnology. Then we start getting into the negatives all the way, start going out to EEM, right? And this is what we use for gauging global risk on, risk off market sentiment. Communications is right behind it. All right, so looking at the sectors, USO, gold, natural gas, marijuana, then a little bit of the energy markets, TLT, which we got a couple trades on in TLT. Um, kind of put them on for the March Fed meeting, posted those in the alerts channel. Then we start getting into the negatives, including Bitcoin. But with that Bitcoin news that came out, we may see a change in that. So really want to keep your eye on the financials today. Morning, buddy. How you doing? Keep your eye on the financials today. With everything that's going on, we see these mean reversions. These exaggerated moves in the VIX. The dollar really, really looking for a break to the downside here. Yesterday it was interesting. We had more than once yesterday where there was just periods of the day that we had stocks and bonds moving in the same direction at the same time. And you can see that explosive move in the 10-year after we had closed yesterday. So we're going to look to see if this sticks. We already reverted back down. We basically closed the gap. We've talked about that before. So we're looking at a dollar breaking to the downside, bonds looking for another break to the upside, and a market that looks really well in sync, right? Something to note, by the way, this is the VIX futures. You generally want to see it look like this, where uh, what is close in is low down, and then what is far out is higher up, right? Because it makes sense. Things that are very close in time don't carry as much risk generally as things that are farther out in time, because you can't really anticipate what could happen in the future, right? Hurricanes, floods, crop failure, all kinds of things could happen in the future that we just can't anticipate. So generally, things farther out in time cost more. And that's where we get our normal slope between time and price. Contango. When we fall out of contango and we get into backwardation, that's where the front month becomes more expensive than months farther out, right? And you can see even while I'm talking that this is shifting around because it's responding to the news that came through with Russia and everything else. The front month, the right now, is getting bid up because everybody's very concerned about their right now immediate environment. They're more concerned about their immediate environment than they are about their future. And we're seeing that reflected here. And the reason it's important is because all of your VIX products, all of your implied volatility tools, all your products come from the VIX futures. In one way, shape, or another, all of the formulas come back to this. So if you're trading options in SPY, it still goes back to the VIX futures, right? All of that formula goes back to the VIX futures in some way, shape, or form. When we get into backwardation within the VIX futures, there are ramifications for the algorithms, for the tools that identify and measure and quantify volatility. We start to see these broad brush strokes of volatility coming into the options chain. So it's really important to keep your eye on the VIX futures. There are a couple of names that are up this morning. There are always a couple of names, right? There's always something to focus on. Upstart, Costco, or excuse me, Cisco, Walmart. And when it comes to those retail names, Walmart and Target and Dollar Tree, and right, we want to look for anything that's going to carry that correlation, peer groups, right? Kind of follow it down the line. So got Amazon moving around pretty good this morning. So there are always names, right? I want to follow those names back for an opportunity. Some of those Wall Street bet names were moving yesterday. GameStop, Zynga, AMC, they were getting a little rowdy yesterday. And we look at the list of weekly options down at the bottom, we can see that there are plenty of names out there to trade. All right. So if you're having a hard time, this isn't a day to lean into the sectors. We don't want to run any kind of alpha protocols. Don't lean into the sectors. You're going to want to run your own scans and stick to your own watch list. We got to be stock pickers on a day like this, right? Not just lean into those sectors. So that's what I got for you guys. Watch the clock. Keep your eye on the news. Everybody be careful. Have a good day, and I'll see you all tomorrow.